Highly addictive, highly destructive, and difficult to stop using. No, it's not cocaine, it's a piece of plastic called the credit card. Most of us have one or more credit cards, which can be helpful. However, if they're not handled with extreme caution, they're a ticking time bomb that can seriously hinder your efforts to achieve financial independence. Why, then, are they so extremely dangerous? Keep watching the video to find out how credit card debt became modern slavery. Before we move on, please smash that like button and subscribe to Proactive Investing to never miss any of our newest content about investing and economics. When specific businesses, including oil companies and hotel chains, started issuing credit cards to customers for purchasing made at company outlets in the 1920s, the use of credit cards as we know it today was born. The Diners Club Inc. introduced the first credit card that could be used at various businesses in 1950. The American Express Company launched a travel and entertainment card in 1958, a significant card of this kind. In this system, the credit card company bills its cardholders periodically, typically monthly, and assesses an annual fee. The credit card issuer receives a service fee from cooperating businesses worldwide that ranges between 4 and 7% of total billings. The bank credit card system was a later innovation. Under this system, the bank credits the merchant's account as sales slips are received and assembles the charges to be billed to the cardholder at the end of the billing period. The cardholder then pays the bank in whole or monthly installments with interest or carrying charges added. The first national program was Bank AmeriCard, which the Bank of America launched on a state-by-state basis in California in 1958 and began to authorize in other states in 1966, but was renamed Visa in 1976 to 1977. As the list of included services grew, many banks that initially launched credit card plans on a city-wide or regional basis eventually affiliated with major national bank plans. Personal credit underwent a change as a result of this development because it was no longer geographically constrained. A person could use a credit card to make national and eventually international purchases thanks to the expanding reach of credit networks. The system has spread to every continent. Other well-known bank cards include Barclaycard, Discover, JCB, and MasterCard. Please subscribe to our channel Proactive Investing if you haven't done yet, and do give this video a big thumbs up if you're enjoying it so far. The cardholder can pay in installments using bank credit card systems, in which case the bank receives interest on the unpaid balance. Banks can avoid charging annual fees to cardholders and impose a lower service fee on participating merchants thanks to the interest income. By depositing their bills of sale within the bank, merchants benefit from the system's additional benefit of receiving payments quickly. The third type of credit card is a store card. Because they're only accepted by the issuing retailer, they need the widespread acceptance of bank cards or travel and entertainment cards. Credit card usage started to rise sharply in the late 20th century, and many users soon spent more than they earned. Users of high-interest credit cards who could not pay their balances in full each month were consequently hit with hefty penalty fees and quickly fell into default. As consumers were forced to rely more on credit due to the recession and rising unemployment that accompanied the global financial crisis of 2008 to 2009, defaults increased. The credit card holders' Bill of Rights, which would increase consumer protections and restrict or end unfair or abusive credit card industry practices, was approved by the US House of Representatives in April of 2009. In industrialized nations like the United States, which is the most indebted nation in the world, the United Kingdom, and Australia, credit card debt is typically higher. However, credit card debt generally is lower in non-industrialized countries and nations with strict bankruptcy laws like Germany. With average margins of about 18%, credit cards are among the banking industry's most lucrative products. This means that if you only make the minimum payment due to your credit card, typically 3% of the outstanding balance, the bank will assess your interest of the unpaid balance ranging from 16 to 24%. The highest possible interest rates, about 32%, will apply if you miss a payment, and penalty charges will also accrue. The interest is then calculated with the penalty charges as well. The way the product is set up makes it very challenging to get out of the credit card debt hole once you're there. The goal is to keep you trapped in an endless cycle of soul-crushing debt that keeps growing and never ends. Let's illustrate how a credit card works with the Lily's example. Lily spent $10,000 on furniture on her credit card, but she only made the $300 minimum payment that appears on her statement in the first month. Lily would need to pay off her initial $10,000 credit card debt at an interest rate of 18% over 30 years if she makes no further purchases and only makes the minimum payment of 3%. She would have to spend a total of $20,000 over 30 years on her $10,000 transaction. That's the interest of $10,000. If she had missed a few payments, she would have been penalized and the claim would have been at least 24% after the first 2 payments. If she continued to miss payments, the interest would have risen to 32%. Keeping with the example, Lily would owe $15,720 after the first year if she makes no payments towards her initial $10,000 credit card transaction. In 2 years, this sum would be about $24,000. Lily would have to pay more than twice as much for her furniture, or $14,000 more than she did 2 years ago when she only spent $10,000. Of course, Lily only used her credit card once to purchase furniture in this example, but that is different from how much people use their credit cards. They use it, pay the minimum payment, and keep making it up. Sorry to interrupt the video, but last week we uploaded a video as to why China sold US bonds to destroy the USA. If you haven't seen that video yet, I would highly recommend you watch it after you finish this video. Let's quickly move back onto the video. The dance is over when they have used up the entire credit card limit. They are now forced to make the minimum payment, which could have grown to a sizable sum depending on their credit card limit. Here is where most people go and get another credit card because they cannot support the lifestyle they have grown accustomed to. They continue this cycle until they cannot take on any more debt. They are currently unable to cover the minimum payments and their ongoing living costs. They begin missing payments, which raises the balance owed and, as a result, the minimum payments. Eventually, they become inundated with calls from collection agencies. At this point, payday loans and loan sharks enter the picture. A credit card scam victim is in a financial crunch and will accept any offer, even if it comes with exorbitant interest rates from dishonest people or businesses. This is an utterly disastrous outcome for the credit card victim. However, this is precisely what the bank or credit card company hopes for and dreams about. Someone having trouble paying off their credit card debt is a good customer for them, whereas someone who pays their entire credit card balance on time is a lousy customer. Most people are aware of this, but occasionally they are persuaded by marketing ploys. Apply for our credit card today and pay no interest. Have you ever heard of that one? Let us know the marketing ploy you hear the most in the comments below. With this card, you can use your credit card without paying interest for a set amount of time, after which they'll replace your zero interest rate with a much higher one. Pay later, buy now, the financial sector's foremost dangerous words. Almost anything can be purchased using a credit card on an installment plan, typically with little to no interest. TVs, furniture, modern phones, gaming consoles, and more. While this may initially seem like a good deal, if you get into the habit of paying for things in installments before you know it, your income will become completely depleted. It will be more challenging to manage your credit card debt, and it will inevitably grow. The only purchases that you should typically be financed are around your house and car, with very few exceptions. For those who avoid using credit cards, kudos to you for avoiding one of life's biggest monetary pitfalls. There are some advantages to using this nasty piece of plastic, providing you have the self-control and organization to pay off your credit card debt monthly. Most credit cards give you discounts at specific retailers, buy one get one free deals, free movie tickets, access to airport lounges, and a number of other perks that can help you save money. They also offer cashback or a points-based reward system. All of these advantages are provided to entice you to use it, and once you do, they hope that you will struggle to pay it back, that you will only make the minimum payment, or even worse, that you will skip a payment altogether. It's best to stay away if you can't use it responsibly and with extreme caution. And with that, that concludes today's video. Please let us know what you think about modern form of slavery in the comment section below. Thank you guys so much for watching and for your continued support. Please like, subscribe, and click the bell icon for more videos. For now, don't forget to watch the video on why China sold US bonds to destroy the USA.